Good afternoon, guys. I'm just going to give you a few seconds, a minute or so to enter the room, and we'll get this webinar underway. All right, so good afternoon. Welcome to another webinar with me, Aaron Hill. So as you can see here, the webinar is on advanced Fibonacci strategies. So again, for those of you who are unaware who's behind the mic, my name's Aaron Hill and I'm one of the market analysts here at FP Markets. Now for this webinar, we are back at it with the Fibonacci ratios, with the main aim being to show how one can apply these ratios to form a technically based strategy. Ultimately, personally, I look for clear-cut Fibonacci clusters, which, as their name implies, is a method of adding weight to an individual Fibonacci ratio. And what we do is we locate a number of Fib ratios in one spot, if you will. As always, though, whatever I demonstrate here today should be thoroughly back-tested and proved for yourself before applying a method in the live markets. Now, look, it's fine to fire across any questions you may have during the presentation, as long as it relates to the slide in question. Also, I encourage all attendees here to search their own charts during the presentation and attempt to locate Fib Confluence, so we can possibly discuss this at the end. All right, so very quickly, guys, quick disclaimer: trade responsibly. Derivative products are highly leveraged. They carry a high level of risk and are not suitable for all investors. Look, I'm not going to read through all of this, but suffice to say that this is not investment advice. This presentation is simply an educational presentation. All right, so in terms of the content for this afternoon's webinar, of course, we're going to look at briefly defining market structure. This is the higher highs, higher lows, lower highs, the trend structure, basically, because we do need this to define Fibonacci ratios. Then we'll then be looking at the following Fibonacci concepts. So we'll be looking at retracements, extensions, expansions, projections, and finally, we'll be looking at Fibonacci Confluence. Now, I do see a number of people confusing these three here: extensions, expansions, and projections. Now, retracements are pretty straightforward, but the other three here do tend to cause confusion among new traders. As for any questions I miss, it is here at the end. You can try and fire those questions across, and I will try to get round to them. Look, as I say in all of my webinars, any questions missed or those that require more of a full answer, if you will, you can email me at and the research team at marketanalyst@fpmarkets.com, and we'll get back to you as soon as possible. Look, guys, alternatively, you can use the support email. Now, this is supportteam@fpmarkets.com. Again, what happens there, though, is the question gets forwarded to the research team. So it's just really much easier to send any questions you have to marketanalyst@fpmarkets.com. All right, so kicking off with the very basics, the Fib sequence. So really, I don't want to spend too much time on this. I just want you really to understand that there is a sequence behind all of these Fibonacci ratios. So the 61.8% fib ratio. We also have the 1.618%. These are very, very important ratios. So by dividing a number in the Fibonacci sequence by the next higher number will equate to approximately 0.618, so 61.8%. So 13 divided by 21 will give you approximately that value. We can also find the 1.618, which is known as the golden ratio, actually, or the golden mean, or phi. We can find this by taking the inverse of, this is the inverse of 0.618. And look, both numbers are found throughout nature and biology. Therefore, they are deemed important levels for traders. Now, just to be clear, if you want to find the 1.618, other than taking the inverse of 0.618, excuse me, you can divide 21 by 13. So you divide by the value previous to find the 1.618 ratio. You can have a try of that yourselves, guys. Look, I'll just prove it really quickly. Just give me a second here. Just pull up the calculator. Here we go. All right, so I have to get rid of the pen. Yeah, okay. So look, let's go with 55. Sorry about this. 55 divided by 34. There we go, 1.617. Rounded up is 1.618. We can do this with another one, 233. Let's go 233 divided by 144. This gives us 1.618, bang on. All right, so, and if you want to find the 0.618, all you do, as I said, is divide forward. So 13 divided by 21 gives us 0.619. So it's a little high, but the higher you go within the Fibonacci sequence, the closer the ratio becomes. So just to prove this, 144 divided by 233 gives us 0.618. Okay, enough of that. Let's move on to the 38.2% retracement. This is another well-known Fibonacci ratio. And what we do here is we simply divide two steps. We simply divide within the sequence by the next two higher numbers. So 13 divided by 34. And this will provide an approximate value of 0.382. I can prove this if you wish, just really quickly, actually, just so we all know where we are. All right, so 13 divided by 34 gives 0.382. All right, so to find the 23.6% fib level, now to be fair, I do not use the 23.6% fib level. I've never used that ratio, but I know some traders do. So whatever works in your testing. Now, to find the 23.6% fib level within the Fibonacci sequence, you simply have to divide in the sequence by the next three higher numbers. So in this case, 13 divided by 55 would give you 0.236, or it's very close to the, well, it is 23.6%. Now, for the 78.6, you'll often see these are deep ratios. You'll see the 78.6% ratio and also the 88.6% ratio. Now, these are deep, especially for Fibonacci retracements. These are deep retracement ratios. Now, for the 78.6% ratio, this is quite simply the square root of 61.8. So 61.8, take the square root, that will give you 7.86. All right. For the 88.6, quite simply, we take the square root of 78.6. So 78.6, smash that square root button, 8.886. 8.86, excuse me. And that will give you your ratios. So these are the main ratios that I use in my trading. Also, I just want to point out that while not officially a Fibonacci ratio, The 50% level is also commonly used as a retracement ratio. This is fine because it does tend to react to price does tend to react to this ratio. So I do include it, but just be aware that it's not a Fibonacci ratio. As you can see here, the 50 is not showing. It's between 34 and 55. Now, also the 100% projection, which I will get to shortly, that's very good for highlighting AB equals CD levels. Now, again, the 100% projection level is not a Fibonacci level. As you can see, there is nothing between these two Fibonacci numbers, 89 and 144. There is nothing between here. So 100% is not a Fibonacci ratio. So as for Fibonacci projections, if you divide the number, just again, if you divide the number by the previous number in the sequence, so 55 divided by 34, this will give you approximately 1.618. This is a critical level in Fibonacci projections, guys. Very critical level. So look, by dividing 89 by 55, you will get 1.618, and by dividing, say, 8 by 5, again, you will get, I think you will get around 1.615 actually in this case. And by dividing, say 233 by 144, you will get approximately 1.618. Another very popular Fibonacci ratio is, of course, the 1.272% ratio. Now, all this is the square root of 1.618, which, if we hit the, there we go. So it's the square root of 1.618, and then we get the 1.272% ratio. Again, these are the 1.272% and the 1.618% are very, very important. They are critical in projection levels. So let me just, why is that staying there? Excuse me, guys, just bear with me. Let me just clear these drawings. There we go. All right. So any questions on this? I just want to check why do we need this? One question here. Why do we need this? Why do we need what? The Fibonacci ratios here? If you can be a bit clearer, maybe in the question, why do we need this? Why do we need to understand what we're using when we analyze the charts? If you can maybe go a bit deeper in your question, I will gladly answer. Thank you very much. All right, so moving on, market structure. Now, look, as I said at the beginning of this presentation, to apply Fibonacci ratios, you need to understand basic basic market structure. I'm not going to spend too much time on this because we should all know this. This is what we learn when we first begin learning technical analysis. So, series of higher highs and a series of higher lows depict an uptrend. Okay, so higher high, higher low, higher high, higher low. We need to understand these, and we also need to understand when the market transitions into a range, a consolidation, as you can see here. We also need to understand that when the market forms a lower low, lower high, lower low, lower high, we are then in a downtrend. All right, so we need to understand these terms. If we are going, we need to understand that these are swing highs, swing lows. We need to understand that this is what we use to apply the Fibonacci sequence. The Fibonacci ratios. Thank you, Carmi. I'm so sorry if I've mispronounced your name. Why do we need the calculation? To be quite fair with you, you do not need to know the calculation. It's just, for me personally, if I'm going to learn a technique, if I'm going to apply a technique, and I'm going to risk real live money on that technique, I want to know how it's calculated. I want to know how these ratios are formed. That's all. That's my basic answer to that. In terms of why you need to understand the calculation, it's just like understanding the RSI, right? The relative strength index. We all need to understand what the overbought value means, what the oversold value means. But if we're just trading, if a line crosses above the overbought threshold, and we're trying to sell a market, well, we're going to come unstuck, I believe, unless we understand the nuances of that indicator. And that includes understanding the calculation. Again, just my opinion here, Kami. Yeah, so that's all I really have to say on that. All right, so moving on. Any questions on the market structure, do let me know. This is where it gets interesting, and this is where many do fall short. So we have the Fibonacci retracement. We have the Fibonacci extension. Let me just get the pen out. Bear with me. We have the Fibonacci retracement. We have the Fibonacci extension, Fibonacci expansion, and Fibonacci projection. Now, you will, if you go on, if you do scour the many forums that are dedicated to technical analysis, you will find that many people do label these differently, which can lead to confusing, debates, if you will. But these are how I understand these, and how I've learned these are from well-known books. I will go over, I will actually mention one of the books here I read. So look, if you're really interested in Fibonacci, this is where I learned my Fibonacci studies from. And if you just Google Fibonacci Queen, okay, then you'll come across her book. Her name's Caroline. I'm not sure how to pronounce her surname. I can write it in the chat box if you require me to. It's Caroline Borodin, I think her name is. But look, this is a Fibonacci trading book that's well worth a read. I do believe it's available on Amazon as well. Look, I have no affiliation to the book, just to be clear, but it's something that really helped me understand how the terms of Fibonacci and how to apply Fibonacci clusters. It's also what my mentor actually recommended to me as I wanted to learn Fibonacci structure. Okay, so this is something, and also it's really good to understand this clearly, because fib ratios are used in the popular harmonic patterns, right? So for anyone that trades harmonics, they will know that we use Gartley patterns, which uses a deep 78.6% retracement. The BAT pattern uses a deep 88.6% Fibonacci retracement as its defining limit, as one of the defining limits, I should have said. But for the butterfly pattern, I believe this uses a 1.272% Fibonacci extension from point A to B. I don't use the butterfly pattern, just to be clear, but I do often look for Gartley and BAT patterns. Now, Fibonacci retracement, as you can see here, is pretty self-explanatory. I do hope most of us understand this anyway, because this is really quite basic. So a Fibonacci retracement you can find within an uptrend. As we just looked on the previous slide, we have a higher high, we have a higher low, another higher high, another higher low. All right, so this is a series of higher highs, a series of higher lows. Now, if we want to find out where within that uptrend will the market retrace to, we can use Fibonacci retracements, hence the term retrace. So what we do is we apply our Fibonacci retracement tool at point A, drag that to point B, the swing high or the higher high, and then release the Fibonacci indicator. And what you'll have is you'll have a number of ratios pop up at this point here. So you have the 23.6, the 38.2, you'll have the 61.8%. And then you'll look for the, for me, I would always look to confirm the Fibonacci retracement at this point here. I would never, ever rely simply on one Fibonacci ratio. But this is the nuts and bolts of the Fibonacci retracement. So point A, drag the Fibonacci retracement tool from point A to point B. So from the higher low to the higher high, and then release the indicator, and you'll find the number of ratios come up on the screen. I will show you this very shortly on the live charts. Any questions, do fire across, and I'll happily clear it up here before we do. Now, Fibonacci extension. This is where we do see a lot of confusion. Now, I'm giving you textbook definitions here. This is the Fibonacci extension. Now, the Fibonacci extension is an extension of the retracement. So remember, up here, we begin at point A with our Fibonacci tool. and we draw from the, let me just draw that in, we draw from the higher low to the higher high. All right, so that what that will do then is give us these Fibonacci retracement ratios to work with. Now, what happens when price does this? It goes beyond 100% of that leg here from A to B. What happens then? Some people would look for a trend reversal, I guess, because we've just broken a higher low. But for a trend to form, we'd need a lower high to form, followed by a subsequent lower low. So what you can do is you can apply the Fibonacci extension tool. All this is, let me just move those drawings. All this is the Fibonacci retracement tool applied as you would, but then you select the Fibonacci extensions. So you have the 1.272% here. Let me just write that in. And the 1.618% here. Now, just to be clear, how I use these is so beyond here, just as a very basic demonstration. What do we think is below point A here? We have buyers coming in here, dip buyers coming in here. They'll place stops below here. You'll also have, so with these protective stops, they will be sell orders once filled. But also below point A, you'll have what's known as breakout sellers. So you'll have a lot of sell orders here, a lot of sell orders. Now, bigger players, they understand this. They understand where stops are placed technically. So what I look for is I look to take advantage of that, and I look to find confluence. I look for Fibonacci confluence beyond areas of, say, psychologically weak levels. So I look for weakness on the chart, and I look to capitalize on that. So as you can see, prices broke below A, punctured all of these stops. So we have what's known as a stop run. I'm sure you've heard of this. We have a stop run. We've reacted from the 1.272 Fibonacci extension, and we've rallied higher because they have all of this liquidity to buy into from all of those stops. All right, so the Fibonacci extension is a very, very good tool to use, and it's often confused with expansion and projection. Okay, so moving on, Fibonacci expansion. Fibonacci expansion really only requires 2 points, so point A and point B. Same as the Fibonacci extension and the Fibonacci retracement. But the only difference here is we begin, so with the Fibonacci expansion, we do not need anything like this here. This is not required. So where the Fibonacci expansion tool comes in handy is if you're in a parabolic move and you want to, and there's no resistance in sight, the Fibonacci expansion can help you project potential Fibonacci resistance where price may react, and you can potentially take profits or reduce your position. So we begin with the Fibonacci. So I think on MetaTrader, this would be the extension tool. So you would get the extension tool, start at point A. Again, we are in an uptrend here in this example. Start at the higher low, draw this to a point where you think, my God, it's going to keep, we're not going to form any higher low at this point. It's going to continue higher. So we look for a point where we feel, okay, enough is enough. I need to find some resistance here. So point A, drag the indicator to point B, and then pull it back. So we do have 3 points, if you will. So we have point A, pull the indicator to point B, and then back to point A. And this will give you an expansion level to work with. Again, I will show you this on the live chart, but do be aware we only need 2 points of contact for the Fibonacci expansion. Let me just check any questions. All right, excellent. Now, finally, the Fibonacci projection. This requires 3 points of contact. This is the only one out of the Fibonacci setups that require 3 points of contact. All the other 3 only require 2. So Fibonacci projection, again, point A, point B, point C. All right, let me just draw this in. We are in an uptrend. Excuse my drawings. Higher high, high low, higher high, higher low. All right, so we want to project possible resistance. So what we do is this time, unlike here, we do have a retracement from B to C, and we've seen price rallying from here. Okay, now it's time to project some Fibonacci resistance. All right, so we begin at point A, we drag our Fibonacci projection tool to point B, then we drag it to point C, and this will give us our projection at this point. So can you see what's happening here? What we're doing is we're projecting this value of this from A to B. So if this is 20 pips, we're projecting 20 pips from point C. All right, and this is why I said projections can be used as AB equals CD, help to mark AB equals CD. Harmonic AB equals CD patterns. All right, so any questions on this, do let me know. Let me just check the chat box to see if we have anything or the Q&A. Nope. Okay. Do feel free to step forward, because this is where we learn. We learn through interaction, right? We learn through our mistakes and things like that. And if you don't understand, please do step forward and ask me. I can potentially help. I can potentially help clear up any confusions you have regarding technical structure. All right, so we have one question here. What is the difference between a retracement and a projection? Okay, so here we have the retracement and here we have the projection. So the difference between a retracement and a projection, of course, the first 2 points. The first point is for the retracement, we only require 2 points. But for the projection, we require 3 points. All right, guys, you can have these slides by all means. If it helps you, you are more than welcome to have these slides. And you can look at all of this in your free time. But the Fibonacci retracement tool, as you can see, we are looking for the retracement within the trend. We are looking for the retracement. But with the Fibonacci projection, what we're doing is we're looking to take we're looking to project possible resistance or a possible profit objective within the uptrend. So with the retracement, we're looking at from B to C, but with the projection, we're looking at from, say, C to D, if you will. I hope that explains things a little bit clearer. Yeah, I think it's just really time after you spent some time with the charts and spent some time placing these Fibonacci ratios on the chart. Oh, brilliant. So you did understand. Fantastic. Sometimes I'm not sure if I'm being clear. It's okay, me understanding it, but sometimes it's very difficult for me to explain clearly. So how do we get the slides? Look, at the end of this presentation, I will happily look. What you can do is you can email the the research team, and they'll happily provide these slides for you, so you can have a look. And oh, thank you very much, Kami. Thank you. All right, good. And there is a recording. Sorry, yes, there is a recording of this webinar. There will be a recording, and that will be or should be available on YouTube, our YouTube channel. Some of the links will be in the chat box shortly, and we'll also place this on the main website of the for FP Market. So that's under resources, and you'll find all the archived webinars in different languages and different topics, but you will see this webinar. All right, so let me just remove these drawings and we'll move on. Okay, just checking. All right, so this is where it gets even more interesting. We'll shoot over to the charts now, and let's see how we get on here. All right, so you should, let me just be thorough here. You should now see the chart of the Aussie yen on the H1 time frame. If you can just let me know in the chart, just Y or chat, Y or N, that would be great. So it saves me talking to myself, and we can get this underway. I just want to ensure that you are seeing what I'm seeing on the charts. Just Y or N in the chat box. Okay, all right, good, fantastic. So look, here we go. Right. Bear with me a minute, guys. Bear with me. All right, so as a very basic example, I love the RSI. I'm a very big fan of the RSI, especially divergences. A very big fan of negative and positive divergences. Right, so yes, what I like to look for is I like to look for Fibonacci confluence that's converging with an RSI signal. Now, as you can see here, I'm going to zoom out here. Do not let all of this overwhelm you. It should make more sense shortly. But okay, so first and foremost, what I did here is I looked for an AB equals CD. So A, B, C, D move. And as I said, do you remember what I said? I said this can be marked with the, there we go, with the 100% projection. That's at 91,486. 91,486 from point. So this is a projection. Remember, guys, from the slide, 3 points for the projection. 1, 2, 3. And look, there it is. It's up there. So I bring this down to point C, and that gives me my projection. That's 100%. This is what started things for me. So we had the 100% Fibonacci, 100% projection that coupled with negative divergence out of the RSI provides a high probability trading opportunity. Now, couple this with a number of, so you can see where I've marked this area here. These are to accommodate all of the Fibonacci ratios here. So let's move this out the way. But the first one is here, and that is, as you can see, marked from here to there. That's simply a very deep, I believe, very deep. Just bear with me here, guys. 61.8% Fibonacci retracement at 92,085. So if I don't really want to extend across because I think I have other drawings on here, but as you can see, this is this point here, and that is, it marks the upper range of the Fibonacci area. As you can see, I had this here, and it was this upper area here, the 61.8% from this lower high all the way down to this low point here. Now, as you can see, that marked the upper range. All right, so then we had this area here, another Fibonacci ratio, a Fibonacci retracement ratio, and that is a deep. I'm not sure if you can see it here, guys. Let me zoom in so we can be clearer. That was a, let me just be clear. That was another Fibonacci retracement ratio, a deep one at 78.6 at around 92 the figure. So from the lower high to the low, that gives us another Fibonacci ratio to work with. Then we had this point here, which I'll have to zoom out for, I apologize. At this point here, another 61.8% Fibonacci retracement ratio, which I think I've already, no, this is a different one. So at 91.73, again, this is this point here. And then we had the lower boundary of the area marked here at the 50% retracement. And this was taken all the way up from here. So as you can see, what I've done here is I've formed a cluster of Fibonacci ratios using these lower highs all the way down as the trend was forming. Is there a defined way to find these lower highs? What I look for is at least a 38.2% retracement. And as you can see, with all of these from the high to the low, we've easily had a 38.2% retracement. So that's really my how I define the swings. At least a 38.2% retracement has to have formed. All right, so we had this area, and let's just move this forward now. So we had this area here. Let me just move this up. So we're on, there we go. Oh, no, sorry, it's a little bit lower here. There we go. So I was looking to sell within this zone here, based on this Fibonacci, this RSI negative divergence and the Fibonacci retracement, the cluster of Fibonacci ratios. As you can see, perfect, picture perfect negative divergence deep within overbought territory on the RSI. This is just one strategy that I'm very fond of. So combining the RSI, negative divergence, combining deep overbought and oversold scenarios on the RSI. So this is overbought, this is oversold, and yes, These prove to be very high probability setups. As you can see here, it reacted very nicely indeed and offered a nice downside move. In terms of stops and things, I usually look for my entry around the lower edge of the area that I've formed, as you can see here. But there will be times, if it's a higher time frame area, I will look to drill down to the lower time frames. What you can do within the lower time frames is find another Fibonacci ratio within that area to potentially sell from, or additional structure which you have found in your testing to prove to offer you an edge. So this is really number one. This is what I look for with my Fibonacci structure. Now, this is one I made earlier. This is one I found earlier. I was looking at earlier, actually, because as you can see, this actually reacted today. And there's actually one in play, or there was one in play. I'll get to that in a minute. But look, it was this area I really wanted to drive your attention to. This is a Fibonacci cluster. This is a picture perfect. If you read that book by Caroline Baroden, the Fibonacci Queen, this is a picture perfect Fibonacci cluster. And just look at the reaction there. Let me zoom in. The reaction was, it was a lovely reaction. This is the M5 chart, guys. The previous chart was a H1 chart. So this is for all you short-term traders. As you can see, again, all I've used here is largely the Fibonacci retracement ratios. As you can see, from this point here, I took, let me just try to highlight this. Okay, this one here, I think this is it's very difficult when they're all very tight together. Let me just zoom in. Sorry about this. Bear with me. I suppose it doesn't really matter, but as you can see here, I took the Fibonacci retracement from this point, from this point, from this point, from this point, and no other points matched up nicely with this. So I took all of these lows. Again, look, it's defined by the retracement has to be defined by more than a 38.2% decline from the swing from the higher high. As you can see, we've got that on each of these swing highs that we've used. Very simple, very effective. And look, Fibonacci, RSI hidden bullish divergence here, hidden bullish divergence. Now, this is a little bit different from from the typical traditional RSI divergences. What you'll see here is the price action taking the lead effectively. So what you'll see here, if we go from this point here to this point here, we see price action showing strength despite the RSI forging a lower low. All right, so price action, this is why it's called hidden divergence. And with the hidden divergences, what you'll find is that they form more in continuation scenarios. So this is exactly what you've got here. We are in a trend, in an uptrend, and we're looking for a continuation to the upside. Although we didn't get it at this point, we did get a nice reaction. And this was bolstered by hidden divergence on the RSI. Plus, the RSI did elbow into oversold territory. Now, I just want to move these just quickly. I want a clean chart because I think I've spotted something else. Just bear with me. Just bear with me here, guys. So if we take this, what I'm looking for here is a projection. So point A, remember projections, 3 points. Point B, and then points. There we go. Look at that. Lovely. So A, B, C, D. We have a picture perfect AB equals CD area here. Look at the reaction to this point. Sorry, that's a 1.272% Fibonacci projection. Why? So if you read Scott Carney's work on AB equals CDs, he actually terms this an AB equals CD alternate pattern. Look at the pinpoint accuracy here. It boggles my mind sometimes how accurate these can be. Now, I just want to see if we have any confluence. We don't really have much here, but this is just to show you, look, with the 1.272%, where did we hit here? So look at this. We also had a double bottom form within the RSI, deep within overbought. And this is, I believe, we also have divergence as well. Typical divergence on the RSI here. And there's the divergence straight into a 1.272% AB equals CD alternate pattern. This is just something I've seen quickly. Other than that, I don't think there's much more Fibonacci confluence to be had here. Certainly not a Fibonacci cluster. All right, the next chart I really had, and and you can feel free to send across any charts you want me to look at. Just tell me the currency pair or indice or anything, and we'll have a look. But look, here we have Ethereum against the US dollar. So for any of you crypto traders out there, this was a nice opportunity to trade on late or early Monday, early on Tuesday for me. So this was a very early trade as we transitioned from Monday to Tuesday. So it was at the close of, if you want, at the close. So as you can see here, price whipsawed through this ascending support here and tested this Fibonacci cluster. As you can see, we have a number, let's remove this, we have a number of levels. Now, I won't go into too much detail here, but this is quite advanced stuff. What we have here is we have a plain and simple 68.1% Fibonacci retracement drawn from leg A to leg B, quite simple, and that's here. All right, that comes across there. We also have a 1.272% expansion. Remember, the Fibonacci expansion comes from point A to point B, and we drag this back. We also have a Fibonacci extension of 1.272% taken from this point here, this low here, to this lower high here, and that gives us this point here. And then we look at, I think we have, what's this? There's another Fibonacci ratio tucked in there somewhere, and I'm not sure. Let me just remove that. So that's, oh, that's a projection. That's the projection. That's the 100% projection. You can see here, 100% projection, and that comes in from point A to point B to point C. Through fear of really confusing you here, this is really what you're looking for when you're looking for Fibonacci areas. You're looking for, quite simply, guys, Fibonacci projection, expansions, extensions, and I've forgotten the last one. So we have 4: retracements, extensions, projections, and expansions. All we're looking for is these to line up and converge with something which you believe, which you have back tested, converges with technical structure. So something you've back tested, something that has an edge, and you can converge you can look for confluence with a number of technical structures: support and resistance, RSI divergences, supply and demand. There are a number of things, moving averages. There's a number of technical concepts you can use to confirm. All right, I just see the S&P 500. No worries, I'll have a check on that. Any particular time frame? If you can let me know, that would be good. All right, I'm going to leave this here. So that was a nice long opportunity recently on the Ethereum against the US dollar on the H1. Meta. Whoopsie, I'm not sure. Oh, there we go. All right, so Meta gapped strongly in recent trading. Now, just to begin with, on Meta, we are now at strong resistance on the RSI, and that resistance comes in at, bear with me, 86.24. Now, combine this with a long-term trendline support turned potential resistance, and we already have some confluence there. We also have a number of Fibonacci retracement ratios. So we have this one, the 78.6% Fibonacci retracement ratio taken from point A to point B. We then have another Fibonacci, 78.6% Fibonacci retracement ratio taken from this point here to point B. Then we have a 38.2% Fibonacci retracement ratio from point A to point B. And this really gives us a nice area of confluence to work with. And time will tell whether this area holds. But we do have a lot working against this. And look, if we do cross into this gap here, below here, There's little stopping. There is a bit of support, resistance turn support here to be aware of, but we could potentially head lower on Meta. All right, let me check out daily time frame for the S&P 500. Okay, bear with me. Let me just new chart. Bear with me here, guys. Stocks, indices. S&P 500. There we go. That's the one. All right. So on the daily time frame, let's have a quick look. All right, so there is something that I did note in, I think it was I'm not sure where I noted this. If you look on the weekly time frame, there is something kicking off or potentially kicking off on the weekly time frame. You can see it here, right? Let's pop this up. Weekly time frame, we have a potential. So remember, what I'm doing here is I'm applying a Fibonacci projection from point A to point B to point C. And what this does is it gives me a, whoops, let's get the 100% on. There we go. This gives us a 100% projection to target at 4372. This can be seen on the daily time frame, but it's a lot clearer on the weekly time frame. Anyway, so we have, this is what I'm looking at currently on the S&P 500. We did actually post this on our chart of the day on Twitter. This is exactly what we were looking at. And the reason why I like this so much is because of this high here that formed on the 16th of August at 4325. Now, if we continue rallying in the S&P 500, now do bear in mind on the S&P 500, we are also above the 200-day simple moving average. And we have broken a major trend line resistance, which is clearer on the weekly time frame, but I will apply that here. Here we go, trend line resistance. We are now above that. We're also above the 200-day simple moving average, which is not applied here, but you can take my word for it, we are. We could continue, if we continue rallying here on the S&P 500, can you imagine the stops, the number of interest and the number of stops above this area here? It would be insane. So what you'd have is sellers coming in here trying to fade this high. You'd also have their stops above here. Then you'd have the breakout buyers above here looking to buy into this market. And then what could potentially happen is you'll have sellers popping in from here and trying to fade this momentum, larger sellers coming in from here. Let me just see if we have any Fibonacci confluence at this point here. Other Fibonacci levels. Let me just see. Let's try and find see, we have this area. I don't like this, to be honest. I mean, I would like to see this more line up with this area here. So let me just see if we can bring this down here and see what happens. So look at this. Here we go. We have a 78.6% lined up nicely with this area. So we can do this zone here. All right. This is one. And this is really it. So we could also look at the Fibonacci extensions from this point here. I just need to see how much this is. Bear with me, guys. All right. So what we're looking for at this point here, we're looking for a Fibonacci extension. Remember, a Fibonacci extension, point A to point B. And then we're looking for, in this case, we're looking for a 2. And this is this is a bit high. Not really something I would include. But look, we do have something to work with here, and we also have a nice area of supply at this point here. So it's certainly something to keep an eye on as you progress, as the S&P 500 price movement unfolds. All right, so no other questions, no other charts. All right, all good. Bear with me. Okay, so Q&A, any other questions, guys? This is the time to fire them across. Other than that, any questions or any comments, support team at fpmarkets.com. We also have, as you can see, the 2 emails here. We also have Market Analyst at fpmarkets.com. If you want the slides for this presentation, this is the email to use, Market Analyst at fpmarkets.com. And I'll happily send them across once we receive your email. Thank you so much for taking the time out of your day or evening, wherever you're based in the world. Please do consider visiting our trading academy. That's up and running now. We have live, we have videos, we have in-depth articles, we have, and we will have quizzes soon on that. We also have, of course, the Traders Hub, which has a number of daily market analyses there, as well as in-depth educational articles and all that good stuff. So I'm just going to have a final check across the all right, excellent, nothing there. I'm just checking the questions. You're very welcome, Kami. Thank you very much for your questions, by the way. All right, so if there's nothing else, ladies and gentlemen, thank you very much for your time. Have a wonderful evening or morning or afternoon. And I'll catch you all very, very soon. Thank you very much, and happy trading.